for being here. It is Thursday, March 10th, 1 o'clock, 1:03 actually. And today we have Sarb Uppal from Community Trust. And Sarb is going to provide us with a little bit of a presentation. I have to preface this though, Sarb.
I know.
I'm gonna put this up first, and then you can kind of address it. We've had some issues on the portal side. So we've encountered a bit of an issue because their portal requires two-factor authentication, which has been really clunky to say the least. So that being prefaced, Sarb, take it away and feel free to address whatever you need. You've got a half an hour, and for anyone that has questions, feel free to either put them in the chat or speak up when time allows, but I'll make sure that we can ask questions and answer. And yeah, feel free to take it away. Thanks, Sarb.
Okay, first and foremost, thank you. I actually have I'm going to pop into a little bit about Community Trust, but I'll give you my background just a little bit to provide context.
Excuse me one moment. Excuse me. Peter, Frank just messaged me and asked me to get you to send him the link, please.
Okay, I'll do that right now.
All right. The more the merrier. So thank you. So yeah, just a little context, a little bit about my background. I fell into mortgages through a real estate investment network, and then I worked as a mortgage broker in a real estate office for about 8 years. Really regretting that I left. I then worked for a mortgage investment corporation based out of Langley. We ended up taking it national. And what ended up happening is I got recruited by my largest partner, or I guess my largest client at the time, which was RBC, to work on their B side. So RBC has 4 people in BC that do all of their B deals. What does that mean? That means if they can't get it approved, usually comes over to us. So if you've heard of Alternative Mortgage Solutions, although they do not advertise it because they don't want the public to know, that's what we did. We would fix up files. So I'm very familiar with what my competitors do. I have a tremendous amount of respect for them. I did a lot of work with Home, Equitable, Bridgewater. I did Haven Tree. Optimum was one of my top lenders. B2B I didn't work a lot with, but I know what they do. So I'll probably focus a little bit more on the niches of where I think I can help with some product line. I think, Peter, anytime there's a hurdle, I'm upfront about it. So we do have two-factor authentication, but I think that you're going to find the products in behind all of this makes up for the added security. And I do work to individualize things as much as I can within a certain structure. So that being said, we don't have a lot of time, so I'm going to jump into that. Is that okay, Peter? Are we good to? Okay. I like to keep a lot of things open only because I never want to forget something because it's easy. I will go quick and then leaving questions at the end because we are different for sure and we are a little bit quirky, but I think we're an awesome tool in the toolbox for sure. I see that Frank wants to come in the waiting room. Do I admit him, Peter? No. Okay. All right.
I'll take care of it.
Okay. So who's Community Trust? Quite frankly, we weren't relevant until about 2 years ago. So a very small little trust company in Ontario. I like to say about the size of Aldergrove Credit Union, speck in the map, but guess what? We were a trust company, and then we became relevant when Questrade bought us. So Questrade bought us, and so we are regulated by OSCE. In fact, we're just finishing up our first audit. Well, I shouldn't say our first audit. And then we are a deposit-taking institution member of CDIC, if that's important to your clients. Okay, we are a fintech, so that's what makes us a little bit different. And so we'll get into the technology in detail, but behind the fintech, we're a mortgage company, and we're an alt-A mortgage company. We are one of the fastest growing alternative lenders in Canada. but that doesn't mean that we do everything really well. There's some things that we don't do very well, and there are things that we do well. I'm very upfront. If you like to run deal scenarios, I'll let you know who does it better, where pricing might be better, or if we're not very good at a certain segment. I like to do that. It just, in my opinion, it builds trust. I'll do a quick on the cafe, i.e. I know you got a million different portals, but what can you actually see on ours? I'll get into where we use technology to kind of move through things a little bit faster. I'll get into how we define service, because that's what everybody says. What does that mean? And then I'll get into the rates and so on and so forth. So, and then I'm really going to hit niches. Okay, so what is new and different about us? Something to be aware of. Okay, so in terms of tech, we just launched in BC about a year ago. We were new to BC. We launched our portal in January. We've done 2 substantive upgrades. The cool thing about, I guess, being a fintech is everything's always being worked upon. What's not used a lot is InstaShare. So that's a way that, you know, clients can upload documents directly to us. I know that, especially for working on stated income files, that we like to look at the documents first, but it is a way. And what we've started to do is we've started to condition less if you use InstaShare. Also, InstaValue, we don't require an appraiser on properties under $1.6 million without a rental component. So if the property value hits, we charge $299. I know that like a couple of our competitors have something similar. However, we're about $50 cheaper, actually, if you want to use InstaValue with us. You can order your appraisers direct. In fact, I'm going to jump to our appraisal list is huge. We've got about 6 appraisers that you can go use. So I'm going to ask, how can I move this up, Peter? Do you know how I can move this bar up? So I can.
I don't. I assume that whatever is showing is just going to show for us.
Okay, all right. Well, what I wanted to show you, and maybe what I'll send to you, is that we have a very, very large appraisal list. In fact, you've got utilization of up to 6 different appraisers just in Vernon alone, and it doesn't have to be the usual suspects. We look to add. In fact, I'd say that we have one of the largest appraisal lists for an alternative lender in the BC marketplace. So some flexibility. We do not use Solidify or NAS or anything of that ilk. And now I'm going to regret moving stuff around. Sorry, I was trying to show you something and I know what I'll do. Okay, in terms of products, okay, this might be easier. Sorry. All right, what I'll do is I'm going to go through products. Okay, so conventional mortgages. So GDS, TDS will go owner occupied up to 80% loan to value, 75 on investment properties. Very flexible on the FICO score on conforming mortgages. So over 65% loan to value, 500 beacon. For some lenders, they'll do 550. They'll have a minimum of 600 beacons. We'll go right to 500. Under 65% loan to value, no minimum beacon score. I did a double bankrupt last year, 269. 269 at that time with a 1% fee. Significantly stronger than the rest of the marketplace on pricing for bruised credit. In fact, I'm looking for bruised credit, but what we really do a lot of is self-employed stated income. So 4850 is what we look for above 65% loan to value. So not 4550, not 4848. And then I know I have a few lenders that are saying 50-50, but that is a very tight 50-50, especially given how we qualify or how we get to the income amounts to base your 4850 on. So Under 65% loan to value, we have three ways that we can look at it. We can do 48-50, of course, and then we have our extended ratios program, which we call high equity program, which allows you to go to 58-60, no charge, no rate increase in the rate premium, or if it's non-conforming, we will look at the files that are over 58-60. We just want three things, and those three things are, do they have any liquid assets? Like a liquid asset mitigant, give me a story on how their income is going to, although we're outside, let's say we're at 69 GDS, 72 TDS. In fact, I had a file today where there were two actors and or a contractor where he's going to get a contract during the term of the mortgage, just not right now. It's just that he's finishing up a building contract, and maybe he's picking up a few more, something of that, where we're not within ratios now, but we will be. And for non-conforming mortgages, I think it is a competitive advantage that we only price it up by a quarter percent. Some of our competitors will price it up dramatically more than that. When we talk about self-employed individuals, we actually break it down further. We break it down into the sole proprietor or incorporated. So with incorporated, you can use financial statements if you see fit, or you can just use 6 months bank statement approach. And I will send you the self-declared letter, because it's actually in terms of what we look for, it's actually not extensive. And for us, there are lenders in the marketplace where they'll want you to do an average. So i.e. in the salary expense or salary field, they'll ask you to do an average. What our underwriters do is they just look at the bank statements. So if they look at the bank statements, they work off of that and they add those up. So if deposits are 130,000 and you state that, gas expense was $5,000 and it only actually totals 3,400, they'll probably ask you why you stated 5,000. So just things to think about. That's what they work on. We're very different in the sense that you could actually send us confirmed income and stated income, and we'll work off the higher of the two. So it is not the death of the file if we were to see a T1 general. Why do I say that? Because oftentimes for a sole proprietor, if they don't have a business registration or if they don't have a business license, sometimes we ask for the T1 to show that they filed as BFS. And then there'll be a little bit of friction. We're not going to use that income. We just want to see that they're actually self-employed. So that is unique. It is a little bit different about us. But again, it's something that Community Trust does. Lots of different acceptable sources of income. So a couple of things that I'll just touch on here. For alimony, we actually deduct that from income as opposed to servicing it. So if you've got somebody that's a high salary, let's say it's a lawyer, that might actually help to deduct the alimony from the income as opposed to putting in servicing, so we can get the ratios in line, especially if we've got some sort of a scenario where there's a marital breakup and somebody's trying to refinance to own the property. Commission-based income, we do treat it with the 6 month approach. So you can state commission-based income. So really, I mean, there's a lot of realtors making a lot of money the last couple of years, especially it looks like this year will be very similar to the last half of last year. So you might want to use that use that for a higher amount. In terms of the number of properties for rental properties, so rental properties, if it's owner occupied, we do 100% add to income. If it's a standalone rental property, that's an 85% offset. So 100% add to, 85% offset. We will look at, and when I say owner occupied, I mean basement suites, carriage home, laneway. But we will also look at student income. So if you've got somebody going to university and they like to rent out to students, all we ask for with student income, so not a self-contained suite, we don't necessarily need a self-contained suite in that. We'll go with room rentals, 2 students up to $1,000. And what we look for is 3 months bank statements to support the tenancy agreement. Let's see. So we did talk about non-conforming mortgages a little bit. Again, you're going to have that extra bucket. And one of our niches is with lower FICO scores. So is the fact that we will price on the highest beacon score of any of the income earning applicants. So for example, I've got App One is a restaurant owner that makes $80,000 a year with a 510 beacon score. And App Two works at Tim Hortons earning $8,000 a year part-time. I would venture to say that with current rates, that deal on the street would probably be about $399 with a 1% fee because of the principal beacon score of 510, and App Two, let's say, has a 700 beacon. That same file with us, we would price at 3.39% with a 1% fee, so substantially stronger. In fact, because the spread is so small because of our overall how we price on our portfolio, we would love to help credit challenge clients. And I do understand that there would be strong relationships with our competitors, but I would ask to do a deal run just so I could get some pricing on something. We do second mortgages. So minimum mortgage size is $100,000, 699, 2% fee split. We will go behind so banks and credit unions predominantly. Again, 48, 50, 30-year AM. Well, actually, I'll get into, and it's coming up, HELOCs. We'll do a HELOC in second position as well. Prime plus 4, 2% fee split for HELOCs. So investment programs, okay, we are about 50 basis points higher on rental properties. I know one of our competitors is only a quarter. But we're a little bit more flexible about where we'll go, and also the mortgage size. So we do not have a maximum mortgage amount. In fact, I know that I mentioned that 100,000 is our smallest mortgage. We've done $5-6 million mortgages, and sliding scale depends on the area, and I'll get into sliding scale a little bit more when I hit the tiers, because right now we're lending in areas. Well, we're lending just about everywhere south of Prince George. So if you've got certain areas that you want to discuss, we can get into that a little bit further as well. So what do we look for? I think this is important. I'll send this out. This is actually the broker kit. So proof of ownership. We just one of the things about us is we just want to see that they've got 2 years in the industry. They don't have to be self-employed for 2 years, just in the industry. So, you know, gradually moving from something to something else, as opposed to a hard switch. And then also just you've got two different options for how you want to use income. I'll get into our T1 general program, and then I'll also get into our stated income program as well. Home equity line of credit. Currently, we're at prime plus 3, 1% fee. I think it's a great product for anybody that's inventory based, because look, usually when you're BFS, you're maximizing on, you're trying to access as much credit as you can. You probably maxed out on your line of credit. You've probably maxed out on any type of unsecured debt, but this will give them something that's revolving. So 65% loan to value, no maximum mortgage amount. I'll get into a little bit about ETOs. So for us, ETOs, I know a lot of our competitors will have you at 200,000. So I break up the competition a little bit, like, you know, you've got some of the bigger players like Home and Equitable, and then you've got a lot of players that don't like to go above 750,000. Some of them don't want to go above $1 million, and even to get to $1 million requires an exception. For us, we'll look at the larger mortgage sizes, but ETO amount, some of the small players like to do 200,000. Some of the bigger ones will do more. We're 350,000. And again, that's, you know, you could be using that for investments or to expand the company and so on and so forth. If you want to get around that, you could use our HELOC product. And we can discuss just different tips and trips, because to tell you the truth, there are my role is really to give you a guideline or a roadmap of how we can get around, find a solution within our organization.
Sorry.
Yes.
Sorry. So so that HELOC, you're saying that it goes to 80%. So is that kind of, you guys aren't bound by the 65% maximum HELOC that that conventional lenders would be?
Sorry, we would just top up with a fixed product to get to 80.
Gotcha.
Okay, and how do we access the line of credit? Is it checks given out, or is it they've got to phone in and get the money released?
Yeah, so you would just call in. So you've got, actually this segues to the 360 approach. So one of the unique things about us is that you've got a portal, but the portal's not enough for communication a lot of times. And I think that ranges right through the industry. We have from 8 a.m. To 8 p.m. or 5 a.m. to 5 p.m. every single day. We have about 12 to 15 people that are there to handle your calls. The response time is approximately 15 seconds, and they handle what you need in terms of one-touch resolution almost 70% of the time. If you need to get through to the underwriter, they'll ask you if you do you want them to give you a call back? Do they want you to text? Do you want the text message, or do you want an email? The same goes for the fulfillment specialists. So, actually, Deb, this is a great example. I was on the road. Typically, for most organizations, I'm the touch point with the deal coming in. But once the deal's in, you've got somebody 15 seconds away to answer some of your questions. So what does that mean? In-flight deals mean something like, hey, I just found out that I didn't add that child tax credit to the file because they just realized that, you know, X amount. Oh, guess what? They just found out they're getting a promotion. It's going to add this. So again, you don't have to wait for an underwriter. We can patch you through, but we've got people to resolve a lot of the issues around. So quite frankly, we had right off the top, Peter had mentioned that there was an ingestion issue with a file that was submitted, and as it comes across to our side, we can actually figure out this things a lot faster because you have dedicated people to you. And some of the people at our mortgage advisory team are underwriters, and in fact, I've got one of the people's, sorry, I shouldn't say people, but Deb. Diane Henry, for example, we talked about this. She lives in Kamloops, so she's familiar with the areas. You can even run a deal by them if you want it, but you've got somebody there all the time. So I think that's important. We're the only ones that do that, and we're expanding on that as well. So in the all-day space, I don't know of any other lender that provides you, I guess, almost like live care every business day.
Sorry. So okay. So we've got kind of a customer portal. So that sounds great. I know we're running short on time. So is there anything that you wanted to hit on in the last couple of minutes here before I kind of open it up to broker questions?
Yes. I wanted you to see the T1 program. So the T1, we have this T1 stated. Okay, so we have sole proprietor stated program. But our actually confirmed income program is incredible. If you look on screen, the highlighted portions are the only thing that we're deducting. So everything else gets added back. So I think it's actually a gem of a program. Most people will default to 6 months stated, but if you don't require all that income, or you already have the documents, this is a lot faster to underwrite as well. We talked about the different level or different number of appraisers that we have just in Vernon. So you can see there's 6 appraisers right there in Vernon, and I can email that to you. This is all available on the portal, but I'll send a package out as well. And in terms of just niches, we price on the highest beacon score. We're okay with guarantors. A lot of people want people on title. Under 65%, actually, this is something that we do quite commonly. Under 65% loan to value. If you've got a co-signer who signed for their adult children's mortgage, and you can show with 6 months bank statements, the adult child, or I guess in this case, somebody, 25, 30 years old is making that payment, we'll take that right out of debt servicing. So we can be really flexible with how we look at it. New construction, if the contract's longer than 1 year, we'll use the current market value. We'll actually 100% finance that property if the values increase. So, hey, they wrote on it a year and a half ago, and it was worth 500 now. Now it's worth 700. We'll do 80% of the 700, which is 560, up to the maximum of the purchase price of 500. They get all their deposits back at the notary's or lawyer's office. So again, we can work with 100% financing on owner-occupied properties. We don't do holdcos currently. That, as of yesterday, news is that's going to be set to change. We talked about 85% offset for standalones and 100% add to income for principal residents. And again, we talked about doing second mortgages. We talked about HELOC seconds. Non-conforming is all about the story. We are new, as we discussed. There is a big opportunity for you to be a big fish in a small pond. The BC team.
Barb, why don't we leave it right there because we're running short on time?
Sure.
Why don't the brokers start asking questions? Because I'm sure people have questions.
Please do.
So I'll start with one question that Dave Iverson had during the meeting. He was asking about whether or not notaries are acceptable in terms of closing files.
Yes, whoever you want to use.
All right, and then Kelly, you mentioned that you had experience with the portal. Do you want to share?
Yes, Sarb, I'm Deb's assistant. So I just have a question. If you are able to add more than one user to the two-step authentication?
Yes. Yes.
Yes. Okay. And what about the call center? Can they assist with
Absolutely. Absolutely.
Like, yeah.
I never want you to wait more than 15 seconds for an answer. Like, so the idea of, okay, so just to give you an idea, the idea of the mortgage advisory call center was this. It is really hard to get underwriters. And so we just want them to be able to decision as fast as possible on files. The reason for that, if we can, a lot of the phone calls sometimes might be, hey, can we move the payment out? Or can we change the date on this? We're trying to resolve a lot of those so that we can get to a place where we're much faster.
Okay, and then with the portal, so you're basically saying that if a broker and an assistant are working on a deal, we can both log in separately and access it, or if people are co-brokering, because we don't want to run into any issues with trying to log in and not being able to without getting that email for authentication.
Okay, all right.
So you guys, just so you know how this works is, and Sarb knows I'm not happy right now. Like so much so that I almost canceled this meeting today. Because number one, I sent a deal in, I don't know, 10 days ago. It wasn't showing up. Where the hell is it? I got asked to send it in again, sent it in again, it still wasn't showing up. So I finally had to this morning copy the application and resend it. I can see it on the portal now. However, what's happening with the portal is, for instance, I logged in, or Kelly was trying to log in. Once you log in, it sends you a verification code. Well, from the time that Kelly logged in and she was up trying to look at what's happening or upload documents, I went to the washroom and then came back. Well, there was a verification code in my email. I sent that to Kelly, and by the time it got to Kelly, it was timed out. So you have to, when you log in, an email is going to come that gives you a verification code, and then within minutes you have to log in, otherwise it logs you out, and then you have to do a verification code again. So those of you guys that know me and know how busy I am, it's not a happy world for me, because I don't have the time nor the patience to sit here and send verification codes all over the place. Now, Sarb has said that each one of us will have our own login, so I don't have to do that. But just so you guys know, if you're on the portal, you will get a verification code and you have to log in. So that's why Kelly was asking if it could be sent to her at the same time, because if I log in from somewhere else and the verification code is only being sent to her, well, now she's got to send it to me, and it might lag in time and it might lapse. So that's where the process is. Did I miss anything, Peter or Kelly?
I don't think so.
No, you're right. Usually what I'll do is to streamline things, what I'll do is I will just have an email address that goes to both parties. Sometimes I'll just, for some offices, I'll do an info email and then everybody gets a notification. But really what we do is everybody has their own individual portal. So you'll just get a notification code that comes to your phone through email or through the screen. We also have a mobile app where you don't need to log in every time. In my world, I've got about 6 or 7 competitors. I think if you
hang on a second, Sarb. So you're telling me on my desktop computer that is secure, I have to have the verification code, but on my Wi-Fi data that I don't have to have a verification code and I can just log right in? Is that what you're telling me?
What I'm saying is on your desktop, what we do is we send you 2-step authentication. But what we do with your mobile device is you have usually a Face ID or a
And what if I don't? What if I don't?
Then it would be that. Actually, I've never been asked that before. I don't know.
Well, of course, it would be me that would ask that question. So my concern is that this is cellular and people get hacked on their cellulars all the time. So to me, this is less secure than my desktop, yet on the desktop, you're asking me for a 2-step, and I warned you were going to get raked over the coals. So you're telling me that it's going to be a 2-step process on my laptop, which is secure, but on my phone, it's only a 1-step. Help me understand this. Makes no sense.
So, to answer that question, my understanding is that we integrate with the security functions that are already on the phone. And again, these are really technical questions, so I have to be very cautious about how I answer them. Probably what might be better is if I get an explanation from our IT team. But my understanding generally is that we work with the security functions on your phone to authenticate that the person that is actually accessing the information is you.
Again, that makes no sense to me because there are people who don't have that security on their phone.
Yeah, that portion, Deb, I got to find out. I'm not sure. Any
All right.
area questions or product questions?
So there's a couple questions that came in through the chat. Dean is asking whether or not Community Trust has a commercial division.
We don't. Great question. Oh, well, actually, initially they did, but the focus, we've actually kind of shut that down. It was in Ontario to focus on Alt-A lending.
Okay. Next question is, would you entertain a construction mortgage in Revelstoke?
We don't do construction currently, but we will entertain Revelstoke.
What was you mentioned something about construction. You had something in there about construction. What
Yeah,
was that?
so our new construction program is this. If you work with builders, developers, or if you have clients that have bought a pre-sale, so and it's going to be owner occupied, as long as that contract is 12 months or more, we will use the current market value as opposed to the actual purchase price. I.e., in today's, for the last few years, the current market value is much higher. So, for example, if somebody bought something at 500 or 700, we'd go 80% of this 700, which is about 560. So we would actually lend them the full 500,000. They'd walk into the notary or lawyer's office, and they'd receive all their deposits back, which they can use for furniture, maybe buying a car, whatever they see, however they see fit. So I think I mean, if you're in the Okanagan, it's exploding. I think it's a great way to say to a client, you know, you can get, you know, this credit union mortgage, or you can take this 1 year 3.39%, get all your deposits back, use them for what you see fit, and we'll refinance you given that higher valuation.
Right. So instead of looking at the purchase price, we're actually looking at the value.
Right.
Right. So typically in most prime lending, we're going to say the lower of, and you're okay with the higher of.
That's correct.
Good. All right.
Owner occupied only though.
Yeah. Okay. So that's good. Does anyone else have any other questions? I know we run a bit over time with Sarb, so feel free to ask away.
The tougher, the better.
All right.
No, Sarb's probably thinking, anybody else talk but Deb. No, but no more Deb.
We're just getting to know each other.
All right, so I think we've got all the questions answered there. I've got your contact info, and yeah, thank you for sharing that with us. Again, I will post these videos to our YouTube page, and so anyone that wants to review it, I'll also put Sarb's contact info. Sarb, do you have the contact info? I've sent you everyone's contact info yet?
I'll double check. Yes, I know that the brokerage is registered. I'll just double check if I have everybody's sub-mortgage agreement.
Okay, perfect. So if there's nothing further, I will let you pop off the meeting. And yeah, thank you so much for your time.
Leave with two things. We're lending all over British Columbia, and trust me, it's worth a call. We've got like those niches with Bruce Credit and so on and so forth. Bankruptcy, for example, we don't need all the docs that Bridgewater asked for. In most cases, for strata, it's usually just a Form B.
Awesome. Well, thank you very much.
Okay.
And if anyone has any questions, they will reach out to you directly.
Okay, sounds great. Thank you, everybody.